Hey everybody, welcome to One More Round with Josh Norris. I'm super excited today. I have my friend Aaron Haley, the founder of the Elite Bullion Investment Group. Today we're going to talk about all kinds of fun stuff. We'll talk about success, talk about the businesses he's in, and he's an expert in gold. So welcome, Aaron. Good to have you.
Thank you. It's good to be with you, Josh.
Yeah, it's good to see you. We met through Arate, so that was such a great group. You've been with the Arate Syndicate for a while, right?
It's been a couple of years
Okay.
since I joined, and it has been just something of massive value.
Yeah.
I really can't say enough good things about Arte.
Well, and I'm newer. I think I joined in February when they did an enrollment, and it's cool because I've gotten to meet people like you, and just I've created some friends. I'm like, wow, I never would have met these people had it not been for that group. So it's pretty sweet. So I know you're an expert in gold, but what did you do? What was the start of your career?
So all the way back to the beginning of kind of where I started working is I started in high school. I started working in technology. Started pulling cable. Neighbor down the street had a business, and I went to work for him. And I was pulling Cat5 cable in businesses, and was just the grunt working. And then I learned how to build server rooms and terminate all of the Cat5 at the time. I think it's a little bit different and faster now, and then got into fiber optics and got certified and trained in that, and then started traveling all around the country and doing installs and working for big corporations, and then started kind of programming everything they were plugged into, and just evolved with that business until I was in my mid-20s. And this was kind of the dot-com boom as well. Yeah. And had a corporate apartment in San Francisco. I had one in Newport Beach, and I flew about 15,000 miles a month. And I would sit down with companies, with the CFO, and I would help them move all of their telecom spend onto one platform and basically save them money, which would fall to the bottom line and make their shareholder price look better. So I would come in and make the CFO look like a rock star. Nice. And it was fun, and it was a great business to grow in. And I walked in one day, and they said, "Aaron, we love you. Here's a severance check. WorldCom had just gone bankrupt, and good luck. You're going to do great in life, kid."
So they're running cash that check really fast for
right. Right? And so that was kind of the first of an oh wow, and so went and ended up finding my way into the mortgage industry. And this was kind of early 2000s. It was before everybody, it really grew like it did. And so I went to work there and learned a new business and learned how to finance residential real estate, and started doing some commercial lending, and started structuring and syndicating deals for developments. And I took that business to a point that we found success, and we're doing very well with it. And in 2006, it was December actually, some kind of unforeseen life circumstances happened, and I ended up stepping away from business for a period of time. My kid brother graduated from Arizona State University, and we were all, I'll never forget, it was December 15th, and we're at Wells Fargo Arena at ASU, and we're sitting there, and I don't know how many, 50,000 people or so are there. It's just packed, and we're taking pictures after graduation. And my daughter Allie was a toddler at the time. I took her with me, and I had a nephew. My brother's son was about the same age. He might have been 2.5.
Yeah.
And then I took Allie and Joe and his wife and their buddy got in his car and headed down to Rocky Point. They were going to celebrate. And on his way down to Rocky Point, at that time, the 85 just south of I-10 was a 2-lane road. Coming north was a diesel pusher motorhome. Yeah. And it was being driven by a family from Sierra Vista. It was a minister and his wife was driving it, and they were going up to Oregon for Christmas. Well, they blew a tire, and it wrapped the steel belt around the steering, and it pulled that coach into the A-pillar of his Honda Civic that he was driving, and it created a fatal accident. And so he graduated college, and 2 hours later he graduated from life. And it ended up being the circumstances around it ended up being a really big deal. and it had to do with a tire manufacturing company that allowed a tire to be sold on vehicles that they were not ever designed or could handle being on. And so we have this incident, we have this, crazy unexpected thing hit you in life. And I mean, it was, you can't account for a plan for things like that. So I stepped away from the mortgage business and went to deal with family matters. At the same time, my mother had brain cancer, and she ended up dying 6 months to the day. That whole incident really kind of broke her spirit. Yeah. And so she was, and so it was, he died on June 15th or December 15th, and we buried her right next to him on June 15th. So they're right next to each other out in a cemetery. And so going through all of that, I had some business ventures that I tried to jump into and failed and was not in the right headspace for abundance and growth and success. And so just kind of had to exist through that. And then, of course, that was right at 2008, and that happened. And so we were very lucky to be led to the precious metals industry. And a company that's here in town was owned by a family that we grew up with. And there was an article in one of the papers about them. And I was reading the article as I got my car washed. And my dad said, well, you should call him and go ask him for a job. So I did. Yeah. And ended up really taking to the business and growing and thriving. And that company in that time had just parabolic growth, and got to experience that and the industry, and really helping people, because that's what people that deal with precious metals do, diversify out of dollar denominated assets. Okay. Whether it's directly like an over-the-counter transaction or inside the structure of a retirement account. And this is an asset that people want to own as a store of value. And so understanding that, and then being able to help and lead people to really protecting the value, because we all trade our time for dollars. Yeah. Right. And everybody hustles, and everyone's about working hard to make more dollars, right? And to grow our net worth and to grow our ability, because the dollar represents certainly freedom and things that gives us options in life, right? Right. The value of the dollar itself, by no fault of any single one of us, is in trouble. And it's frankly based on government spending and abuses of spending. And I won't really wade into politics, other than, from a perspective of just a fiscal approach that both political parties have been spending with reckless abandon for the last generation. And what they want to spend money on really is the difference between the two parties. And so looking at that, going, the problem is they're still expanding the money supply, and they're spending. And now we're starting to see that in our lives. And when people talk about inflation, right, I think if you turn on the news, any news, from any news source that you want, count how many times the word inflation or recession is used. Yeah, those are probably the top two words that come out of people's mouths in our current society. And so understanding what inflation is well, everything is getting more expensive, right? Consumer price indices are going up. Well, why is that? Because the consumer price indices are a mere reflection of the dollar. So when the price goes up, that means the purchasing power of the dollar is going down. Another way to say it is it takes more dollars to buy the same gallon of gas or the same bag of groceries, right? You're getting the same stuff, it's just costing you more, right? Because the dollar buys less. And it's very simple, because they've created all these extra dollars, it takes more dollars to buy the same stuff. That's inflation. Right. And so what do you do when you're in that situation where you have savings, where you have investments, where you have money that you've worked for, and now it's costing you more money, so that the time value of that money is going down, meaning it's not going to last as much time.
And the wages aren't going up at the same clip, so you're basically losing money for your dollars per hour.
Right, right. So that's another factor into kind of the overall economic situation that we're in. But you have really the only chess move that I'm aware of that people have in life is to execute a currency conversion. And if you're Venezuela and your currency is inflating, well, you convert into US dollar. But when you're the US dollar and you are the world reserve currency, and this is happening here, what is your option? And I would say that it's physical gold. And there's different categories of physical gold, and I can really get into the weeds if you want on the asset.
Yeah, I got some questions on that.
Sure.
Like, so, I'll just use my scenario, right? Let's just say for a round number, with $10,000 that I was looking to invest in something. Like, how would it look like me to invest that in gold, in knowing that I don't really necessarily need to turn that into cash, but just as an investment? Do I just keep the gold, put it in a safe, or is there a place that you guys have that holds that for it? How does that work?
So there are two methods in which you can acquire physical gold. The first one would be what I think I just heard you describe, which would be an over-the-counter transaction. I've got this money in the bank, I can wire it into your company, or I can write you a check and I can walk out with gold and silver, physical asset. In that situation where it's an over-the-counter transaction, then you have the latitude to store it wherever you like. If you want to put it in your home safe, that's up to you. If you want to put it in a private depository, or you want to dig a hole in your backyard, that's your prerogative. If you acquire the asset in the structure of a retirement account, an IRA, a 401k, whatever type of retirement account you have can be rolled into a self-directed custodian, and then you can acquire this asset. Inside of that structure, the asset must be held in a depository for the benefit of your IRA. An example of a depository could be the Brinks Depository in Salt Lake City, Utah, or DDSC, or the Delaware Depository in Wilmington, Delaware. There's a few other depositories that you have options, but those are two main depositories. And so your asset would sit there for the benefit of your IRA. And at a certain point in time, you would want to access that or leverage that. And in the future, historically, in times of inflation, this has been the asset class to preserve your wealth with.
Awesome. So, like, if I'm understanding right, then by converting, the 10,000 into gold through either one of the scenarios, the benefit is that as inflation goes up, well, the inflation and the price of gold is going to go up too. So you're not losing that inflation. Is that?
That is historically how it's performed.
Okay.
Gold has been a hedge against inflation, physical gold. Now, there are different categories of physical gold. There are different types. People think it's just one general asset, and they see the price of gold on the news, and they think that's what physical gold trades at. It's very, very different. The price is just simply what they call the spot price, and that represents futures contracts that trade on the COMEX market. So as a dealer, dealers buy spot plus, and then a dealer has a markup, and that's, if spot's at $1,800 and you're buying at $2,000 an ounce, that creates a spread. This is not an asset to consider for a short term. This is not cryptocurrency. It's not going to go up 30,000% in a month. This is a minimum of a 5-year time horizon. And historically, what happens in a normal market is the first 3 years is about the time that it takes to clear your spread, and then another 2 years beyond that to be in an equitable position in your asset.
Okay.
And so the idea to approach, so when I sit with people, what we talk about is let's understand the asset, because it's very different than a gold ETF or other types of gold derivative investments. And the metrics sometimes that you would use for a normal equities investment don't necessarily apply. It's very simply a currency conversion. You look at it in the same way that you would if you were going to go to Europe. You would convert your dollars to euro, or Mexico, you're going to convert to peso, and you're going to go spend in the local currency. Gold is the foundation of all money, and every single currency is exchangeable for gold. And even though currencies are no longer in a gold standard, they still are very much based on gold. Okay. And so what you're doing is you're you're storing the value of what your dollars are today. So as they continue to spend and try and advance more spending bills, and money going here for this and there for that, and the money supply just keeps getting diluted, which generally contributes to the continuation or the increase of inflation. Now you've protected some of your nest egg. And that's the mindset to approach it. And so I tell people, when you consider this asset and you finally execute the conversion, put it in your home safe if you're buying it that way, or leave it in your IRA. Go live your life and check on it once a year. And go enjoy your loved ones, keep doing what you're doing, and just know that you will have something that's been worth value for all time.
Awesome. So you started that in, I know 2006, you told us the story. So when did you start that? 2007?
It was the end of 2008, beginning of 2009. I went to work for a company that's still here in Phoenix and doing very well.
Okay.
And they're a great company, and I'm grateful for the opportunity that they gave me.
Awesome. And then you have obviously your company right now, your new one. How can people work with you? Like, what does that typically look like? Are they just going on your website and doing like an analysis like they would with maybe a financial advisor, or?
It's not even that complicated.
Yeah.
It's so simple. The biggest thing that I recognize with this asset is that people tend to overcomplicate it. It's really simple. You can just pick up the phone, you can call us, you can inquire at our website, and we'll follow up, we'll sit down and have a conversation. And I tell people all the time when we're talking, based on just the conversation that we've had, if your expectation of what you want this asset to do is different than what it actually does, then I'll tell you not to buy it. Right. Or go buy it from my competition. So when you're not happy, you can give them a bad Google review.
Yeah.
And so we really try to work there. And I tell people all the time that there's a place for a gold ETF. Mm-hmm. And if you're a trader and you want to trade in and out and take long and short positions, that's a better vehicle than physical gold. Mm-hmm. Physical gold is a long-term store of value, and those are very different things. Mm-hmm. And so that's what we would sit down and we love the opportunity to talk with people, and if this makes sense for them and to them, then we would be honored for the privilege to earn their business.
Awesome. Well, I know you are big into personal development. We were talking a little bit about it at the meeting on Monday, and then you mentioned a couple of people that you've been in different coaching programs from. Do you think, did that attribute to like your success in this, or is it? It seems like a hard business just because it is something. There is a lot of competition. Correct me if I'm wrong. How are you able to be successful and differentiate yourself?
I think the way that we approach it is different than our competitors. Again, it goes down to categories. There are 3 different categories of gold. The first category is bullion, and bullion comes in the form of bars and coins. And a bar can be from a gram up to 1,000 grams or even bigger. And a coin can be from a dime, a tenth of an ounce, up to a couple ounces. So you have bullion coins as category number 1. The second category is proof gold and proof silver. And those only come in the form of coins. And then the third category is called old gold. And these are collectible coins that were minted prior to 1933. A lot of our competitors like to try and espouse the virtues of old gold. And we like bullion. Bullion is really what most people want to own when they're inquiring about it. And our competitors will try and sell them the old gold. And
is there higher margins for them in the
absolutely,
old gold? Okay.
Absolutely. I've had people that have come to me that have bought old gold from other companies, and they've owned it for 15 years, and it's still not worth what they paid for it.
Wow.
It's not a regulated market. It is very subjective to supply and demand, and that can be a good thing sometimes, depending on what your objectives are. But it really is something for like a multi-generational store of wealth. Like if it would be like fine art, right? If you have an original Monet or a Picasso or something like that, then that is a treasure that you would keep for a long time. And that's more what kind of the high grade collectibles, because there's a mint state scale and it has 10 different grading options. And so the higher stuff really falls into that category. And then the lower stuff is what our competitors like to sell as investment grade coins.
Got it. So from a currency conversion standpoint, the bullion is where it's at.
Correct.
And that's where you guys are.
Correct.
At. Got it.
And so we get very strategic about the different types of bullion coins or bars, the different sizes. I mean, when we build a portfolio for people, we really get into, it's not necessarily the cheapest way to buy it is the best. We look at several different metrics, one of them being our lowest cost over, lowest dealer cost over spot, but then we balance that with the highest dealer sell cost, and then we look for velocity of trading, something that's traded frequently and in high volume, because you always want to sell into the strength of the market. And so those are just some of the things that we do when we really get down to offer our services for people.
Okay, so do you guys sell it? Well, obviously you sell and get them in there, but will you buy it from somebody
Absolutely.
as well? Okay.
Yeah, if somebody wants to liquidate their position and go back into cash, we can facilitate that trade as well, whether that's over the counter or inside of a retirement account.
Okay.
Either one of those, it can just be, it's the same process that I described in reverse, basically. So.
Yeah, it seems like it's something that everybody who's trying to grow wealth needs to look into, at least as part of their diversification with their, wealth planning, right?
I think so.
Yeah.
I really feel that, and especially in the unprecedented times that we're living in now and are forecasted for the future. Those, historically, in times of turbulence, real assets have been the place to be.
Yeah. Awesome. Now, one of the things I remember hearing about you at my first RTA meeting back in January is that you like fast things. And I know didn't you recently buy a plane?
So I've kind of had the bug for speed. I've been a car guy my whole life. I think my first memory of going fast was maybe 5 or 6 years old. My uncle took me for a ride around the block on his motorcycle, and remember having to hold on to him with dear life as he accelerated. And ever since then, it was kind of the bug for speed. And so whether it's cars or boats that go fast, or flying airplanes had been a goal for me for a long time, and picked that up a few years ago, and have been working through the rankings of my pilot's license and the different endorsements, and it's fun stuff.
Yeah.
So.
And what's your favorite car? Like, what do you like to drive?
Gosh, I'm a Porsche guy. Absolutely love Porsches. I think my first car that I ever had was a Volkswagen Squareback, and I took it all apart, and as a 15-year-old kid, and they had to take it to the dumpster. But I learned an awful lot, and then went into the old VW Bugs, and I've always been kind of a VW guy, and that kind of evolves into Porsches. I like. There's not many that I don't like, but that would be. I would say if I were to identify with one brand, it's interesting because that brand, if you look at a car like the 911, the 911 is relatively just the same car. If you look at the original 911 and the one today, you can see the same design. And so it's little tiny bits of improvement over a long period of time lead to excellence. And that's true in life. Right, with all of us, little bits that we can do with ourselves internally, just to be 1% better today than we were yesterday, against ourselves, over a period of time leads to excellence. And the original 911 was great, and the new one that you can get now is just world-class supercar. It's amazing. And so I look at that, and that pedigree and that history and that commitment to excellence over time is a really cool thing with that brand. Automotive technology is really neat. A lot of the electric cars that are coming out are just mind-blowing. Their performance capability and the self-driving capabilities, and it really is an interesting time, if you like that stuff, to see how the internal combustion engine is kind of losing ground to electric motors, and what the capability of those is being discovered and developed. It's kind of a fun time.
It is. It's fascinating too. Like Tesla's a good example. I only ridden in like maybe 3 or 4. My partner has one, and he just got it, and we were sitting there, and I never realized until somebody told me about just think about the acceleration portion of it. And normally you're shifting through gears in a normal car, but it's just pure acceleration. So we were out on 7th Street going to lunch, and he punches it, and it just, puts us both back in the seat, and we're at like 65, and he slowed down pretty quick. Might have been faster than that, but I won't say that on camera.
Right.
And I'm like, man, this thing is intense, and I feel like that's where it's going. Do you see that industry continuing down that line, going more electric?
Well, that's what they're being incentivized to do.
Yeah.
Right. Automakers are government wants them to do that, and so they're incentivizing that. The Tesla story, it's funny, I actually have one of those, and it was an interesting deal. I bought it on accident, and was looking electric, because I was planning to commute, and when you have an electric car here in Phoenix, you get the privilege of driving in the carpool lane, right? Saves a lot of time. And I have a friend who has a boutique dealership, and he had one of the electric Porsches. And I went down and looked at it. It was absolutely just a stunning piece of equipment, and someone else had spoken for it. And so he told me, he said, Aaron, if this guy doesn't perform, it's yours. And then he calls me a couple days later and he goes, well, the guy bought it. I said, okay, no problem. So I looked around, I couldn't find anywhere in the country. And then I started reading about, their range. They only really get a couple hundred miles, and it doesn't quite have the charging infrastructure of Tesla. And then I got on YouTube and I started reading about the Plaid, which is their latest. It's actually the highest performance car, the fastest production car that's available right now,
really,
at any price point. And so I got on Tesla's website, and I'm pulling up, and I'm thinking, okay, maybe I'll go schedule a test drive in Scottsdale. So I put my information in, I put up a $250 deposit, I do all this stuff, and it's Wednesday night at 11:30, and I'm laying in bed on my laptop.
Yeah.
So I go through the whole thing, and I'm thinking, okay, when I complete this, I'm going to schedule a test drive. Maybe I'm going to let them know that I'm a real buyer, but I just don't want to go, I'm not a tire kicker, but I'm not necessarily committed to this thing, because whatever. And the screen goes, okay, you can pick your car up Saturday at 10:30 in the morning. And I went, wait, what? So I started reading the fine print, and I was like, oh shit, I think I just bought a Tesla. So I nudged my wife, and I'm like, hey, I think I just bought a Tesla. And she's like half asleep, and she rolls over and she's like, looks at me like I'm a moron, which she does a lot, right? And I give her plenty of reason to. And she's like, what are you talking about? I'm like, no, seriously. And so I read through it and then went down there, and it was the weirdest buying experience, because I got a text message that says your car's installed 36. I already had the plate on it. All the paperwork was sitting in the front seat. You sign it there, you put it in a drop box, and you drive off.
Wow.
And so ended up with that Tesla Plaid, and it is it's almost indescribable at how the performance characteristics of that car. 0 to 60 is under 2 seconds. Quarter mile is a low 9-second quarter mile. It doesn't stop pulling until 195 or 205, faster than I've ever taken it.
Yeah.
But
what's the fastest that you've taken it?
Yeah.
I can tell a story. I'll tell a quick story, because I know you said VW, the bugs, right? So my wife had a Volkswagen Jetta, and it was a turbo. It's back when we first got married, and it was like her prized possession. She loved this thing. One night it was late. I used to have to go to California a lot for business, and we were driving, and I would always go late at night. So she was sleeping in the passenger seat. Well, this was much faster than my little Honda Accord that, had some Maypop tires and all this stuff, when we met. So she's asleep, and I took that sucker to 135, and just the white striped line got freaking straight. I'm like, oh, and I slowed down real quick. That's the fastest I've ever gone, and it scared the daylights out of me. Probably needed it too. It was like 11:30 at night, just keep me awake. But yeah, it was fun.
Yeah, good times. It's interesting with those cars, and the craziest thing to think of is that this is available to the masses, and it almost opens up the conversation of should it be. And I've never been one to try and put limitations, but you have something that is I lined up against Lamborghinis and tuned McLarens and Porsches, and right, a guy with a twin turbo Viper, and these cars are fast cars, and it just walks them like they left their parking brake on.
Wow.
It's crazy. A Hayabusa, Suzuki, the crotch rocket, from a dig and from a roll. My son, there was one on the freeway that tried to play with us one day, and we beat him, and my son was in the front seat. He's like, Dad, you're doing 165. You better slow down. I'm like, oh yeah. Didn't even realize it.
Wow.
And you out accelerate a crotch rocket. It's that ballistic. And the craziest thought to me is that that's the bar that everyone else is now trying to exceed. And I don't know that they should.
Yeah.
And I've never ever been one to have that conversation before of should you really do that? Yeah. Because I don't know.
Well, and I agree with you, because I'm like you. I'm not one to just let's put more regulations unless there's a need. And does anybody really need to go over a certain or go 0 to 60 in less than 2 seconds on a normal car like that we're driving on the street here? Well, no. Like, our speed limits don't even.
Or should there be training?
Yeah.
Right, because in order to command and control those types of performance capabilities in the past, it wasn't just available to the average guy. You had to be and go through training, and you had to do things and kind of work yourself up to being able to control something with that much power. And it's now you can just go accidentally buy one on a Wednesday night.
Right.
Like, that's crazy.
$250 deposit.
Right? Yeah, it's just like, wow, we're living in crazy times.
Yeah.
And there's some awesome things that we can do today. Actually, I was listening to something the other day, and they were talking about, it was actually in this class with John Assaraf that I took. It's this business marketing class. And there was someone that was talking about jewelry, and they didn't know how to market it, and maybe they were a little embarrassed by it. And this guy comes on, he's a copywriter, he goes, jewelry has been around for the ages, and that was one of the defining outward symbols for royalty. And then they kind of took that on and said, the average person now lives better than kings of 100 years ago even.
Absolutely.
And just to think about how the abundance and how the quality of life for all people is at such an elevated opportunity to live our best lives.
Absolutely.
And it's just cool, I think.
Well, if you got running water, you got a car that works, you got a TV with cable or whatever in your house, you got air conditioning, yeah, you're living better than kings and queens, 50 to 100 years ago.
I wish more people would stop and think about it like that and just be grateful.
Yeah.
Because I think that would be a happier, in society, instead of, it just seems there's a lot of tension and people are on edge. And
I agree. It's like people are trying to be, some people are trying to be offended, and it's like, well, if you just took that same energy of trying to be offended and you're grateful for the things that you have, and you sat there and thought, man, I got a healthy wife, I got 3 kids that are healthy, I'm back healthy, okay, that's first thing, beautiful home, roof over our head, cars that run, that are new, like, when you sit there and think of the things that you have, it's like, well, how can I be mad at this? Or how can I be so divided on a certain topic when you should be grateful for the things that you have?
Absolutely.
So
That's the practice of gratitude. I actually had lunch with another member of RTA Syndicate yesterday, and I asked him about his morning routine. I said, what do you do? And he told me he gets up at 3:30 or 4 o'clock in the morning.
Wow.
And he spends time to himself, and he's talking about how he goes through the process of acknowledging the things in his life that he's grateful for, and meditation and preparing himself, and then he's up for kids getting ready to go to school, and he gets his workout in, and just the guy's got his morning routine dialed, and it was inspirational, and I really admire him for it, and it's one of the things that I look at and would like to obviously improve in my life is get a morning routine down like that, and just get my mindset into looking around at all the things you have to be thankful for.
Yeah, it's funny you bring up morning routines, because I read The Miracle Morning years ago. I don't know if you ever read the book. It's a good book. And so I started getting up at 5, and then I moved that back to 4:30, and I was learning a language, and I was reading a book, and it was good. The problem with the language is that I had no application for it in my life, so I did it for 5 months, and I was like, I'm getting pretty good at Spanish. I don't know anybody who can speak Spanish with me, so all right, so I dropped that. But even today, like, I don't get up that early. I get up usually about 6 o'clock, and I'll start my day. But if I don't, I know the days that if I don't go through my normal routine and read a book, and do just for me, like a quick little, Bible, usually whatever we were doing in church, and do that. But then like a book, like I'm reading Ed Milet's new book right now, and I'm almost finished with it.
How is it? I haven't had a chance to read it yet.
Really, really good.
Okay. The Power of One More?
Yep. So I'm about 115 pages in right now, so about halfway.
Okay.
But it's really, really good. A lot of the things that he talks about on his podcast and things that we've heard through years of just understanding success principles and all that stuff, he dives in deeper, and he's got such a unique way of how he's putting it. Mm-hmm. It's very Master Key to Riches or Think and Grow Rich type of style, but in today's terms.
Okay. Wow.
And so it's great. But I know the days that I get and sometimes it's a little longer, but usually about 15 minutes. That's what I need to start my day. If I don't get that, like I notice myself being a little little off during the day. And I'm like, okay, I didn't start my day the right way, or I jumped right into my email and I saw something. I'm like, I got to take care of that later on today. But like when I set it up correctly and I read and I get my mind right, by the time I see that email, I'm like, no big deal. It's just one more thing. Boom, put it on the list and do your thing. So it's important to have those routines.
I agree.
Yeah, so you've been successful. It sounds like it had a lot of things in your life, and I'm sure you worked hard. But did that come from your upbringing, your parents, or was it you just maybe decided to?
Oh, I've had failure too. I mean, there's plenty. I mean, it's easy to talk about the high points, and it's a lot more humbling to talk about the low points. And just because people are successful in one area or one thing does not mean that they will be in something else.
Yeah.
And I have jumped into other businesses after being successful in some, and have just absolutely been humbled by, just been humbled.
Yeah.
Because life's like, oh, you think you're good, and
yeah.
guess what, son? You got to go back to school and learn some more.
Yeah.
And so I left the first gold company after a couple years, and it went from startup to it was over 100 million in sales in about 18 months, and during a recession. And so it was we were very blessed to be there, but it is also rapid growth and hyper growth is as stressful of a situation as you'll ever be in with a company. And people look at it and go, wow, yeah, but I will tell you that growth can kill a company as quickly or quicker than anything if it's not managed properly. And it didn't. Those guys were awesome managers, so it didn't kill them, but it is also, like, I was kind of done. And so I went up to North Dakota and bought some property and was going to do some development up there, and had one that went okay, and I had another one that didn't go okay. And then I came back and reconnected with some guys, and they were taking a company public, and were able to raise money out of Canada and buy producing oil wells, and got involved in this deal and started with stock at 2 cents a share and left when it was about $4 a share. And it was an experience. And then I bought my wife a company. She comes in one day, she goes, I want you to buy me something. This is 2013, 2014. And our youngest had just been going to school, and she had, chose to forego her career in banking to stay at home with our children and help them. And it was just kind of a personal sacrifice that I'm so grateful for her having chosen to do. And so as her kind of time was freeing up, and she was working with a girlfriend, and they'd bought this little business that had manufactured scented candles. So she comes in one day, she goes, I want to buy the company. And I'm like, okay, well, let's get a balance sheet. Let's get this. Let's find out what this thing's worth. I guess if you want to do it, let's do it. She goes, yeah, they don't have any of that. I went, oh, okay. She goes, well, buy it anyway. I'm like, all right. So we bought it. And as I'm getting my arms around this, they had tried to do it as a network marketing company. And they had a kind of a distributor, territory model. And so we went to the guys that were the industry experts, and just invested a bunch of money with them to build comp plans and do this thing to try and set it up. But that industry was going through kind of an identity crisis and a change. At that point, it was social selling was really starting to kick in, and just the way people were socializing was very different and changing. And then we had Gold Canyon Candles in our backyard that was struggling and ultimately failed. Yeah. And so we had this MLM consultant, this industry guy who'd worked with, every big company, you name them, the top ones, this guy had been.
Amway, Herbalife.
All of them. He worked with all those guys. And so he had this pedigree, and he told me, he goes, you need to hold off on that because of your location, because of, this other one in the backyard that's struggling, because there's a lot of things that you want to wait rolling out an MLM, if you even want to. And so then we did a model change, and we went through social selling, and we're setting it up to sell, and we were approached by a group that was selling through call centers. And they came to us and they said, let's go ahead and make a program, right? It's a Candle of the Month Club. We're like, okay. And so we created this thing, and we called it the Scent of the Season. And they said, okay, you start with an offer. So we made this candle that was basically out of a shot glass, and it was a sample. And then they said, you're gonna, give that to them as the first one, and they pay shipping at $4.95, or the candle's $4.95 and shipping's free. Like, they constructed the offer and brought it to us, and we said, okay, we can do this. And then they wanted to throw in a shopping and dining card or a Walmart gift card or something to incentivize them. So they have all this inbound call traffic, and they started making all these sales. And so we sold and manufactured 18,000 candles. We're like, sweet, and as this reoccurring model, a subscription model, matures and proves out, there's at the end of the first year, you do okay. Right? And so we're looking at this, and we're doing all the work and getting everything up front and going and really struggling with it and grinding, because we're manufacturing and bringing it all in and shipping and fulfilling and doing it all in house. And things started happening. We started getting bad reviews online. People are like, what the hell is going on? And it was the sales tactics. At that point, I had learned a term, baptism by fire, on friendly fraud.
Okay.
And so we started getting, we'd leave Friday and there'd be, I don't know, money in the bank, right? There's the business accounts full, and come in Monday and it's negative, $10,000 or $20,000. What the heck's going on? Yeah. So what these sales agents were doing at these call centers is they were employing a tactic called selling on the cancel. And it took us a while to figure this out, because we're growing and this thing's moving and cash flow's going, and you're building a business and these things are happening. What the hell's going on? So merchant account gets shut down because you get all these chargebacks. Like, what? We verified, we gave them, the merchant processors, all the verification, that doesn't meet our standard, they get their money back. And then we're out our product, and we're out the commission that we paid them. And so we ended up getting hit with friendly fraud to the tune of hundreds and hundreds of thousands, deep six figures.
Wow.
And it, when we figured out what was going on, we shut it down and said, okay, let's, let this settle, let's figure out what we are. And when we kind of got the accounting statement for, the damages and stuff, I remember looking at the account, and I'm like, does this thing come with a jar of Vaseline and a cigarette? This is not good. And it was one of those things where you can do the right things, and you can do all the work, and you can hustle, and sometimes things don't work out, right? When a business fails, it doesn't necessarily mean, and people tend to jump to the negative, right? Well, you fucked up, or there's fraud, or there's not really. Right? There are circumstances that can cause failure that are outside of the scope of understanding. And having to accept that and then counter it, one of my takeaways from that negative experience is one of the things that's talked about in Ed's book, The Power of One More, right? Keep going, keep fighting, readjust. And we did that. I mean, all right, this is what we're dealing with new merchant accounts. We're going to spin it up. We'll get it going. We're getting these guys. We worked hard and did everything that we could, and it still failed and cost us a ton of money. And there's what I'd eventually like to do is talk to people like Ed, and Tony Robbins started talking about this in one of the things where there's a series of analytics that you should look at to see, is it time to quit, right? Does it make sense? Has the opportunity, the sun set on this opportunity? And so all this stuff happened from 2014 to 2019. And then as we got it rebooted and up and ready just to go social selling, 2020 hit. And our cost, it was COVID, everything shut down, we couldn't get supplies. And the cost just to get a jar of glass went from 25 cents to $3.25. And it wasn't consistent because all the big guys that came in and bought all the inventory.
Yeah.
So there wasn't the ability for the little guy to get, and grow and scale. So we're looking at it going, I don't know what else to do. This, we're done. We got to hang it up, and that is a hard thing. Anyone that's experienced that, it's just something that you just, it's not easy.
Yeah, no, it's not.
Yeah,
it's it's an interesting concept too. What you're talking about is teaching people that before. Sometimes you just have to look and make hard, pragmatic decisions. So this ain't gonna go anywhere. And I don't remember what book I was reading it, but it was talking about friction, and it was talking about how friction can make fire, which is good. But in a business, and when you're constantly facing friction in every single area, sometimes you got to look at, is this a season? And then you got to look at, Or is this just the reality of how it's going to be? Sometimes it's a season. Sometimes it's just a cash flow crunch. Sometimes it's just a a vendor that is, or you can't get the supplies, but that's going to change. But when everything's going against you, sometimes it's like, well, maybe this is a sign, that it's time to look somewhere else. But it's like, when do you draw that line?
Honestly, I've thought about writing a book on that topic, and may do that one day. But I would want to do a bunch of research and really come up with a formula, because I think there is one, and I think that it needs to be out there, because the never say die attitude is great and I appreciate it, but there are times where that can be misplaced in a situation where you just dig yourself into a bigger hole. Right. Where if I would have shut the company down a year earlier, I would have been way better off. I took it there was no digging out of it, and I was done, and that was a very, very hard thing.
Yeah. Well, and I think sometimes with companies, it's like pivots on, okay, do I need to adjust what I'm doing? IBM, right? Started as meat slicers of all things. That's how IBM started, the International Business Machine. They made meat slicers. They don't make meat slicers anymore, and obviously they're a different company than they were even 20 years ago, but they've constantly innovated and changed. And I think that's what sometimes people have to do. It's like, well, one, you get so emotionally attached to a company name or something that you built, and you're not used to failing.
Yes.
And then the ego gets in the way, and you're just like, no, I can outwork this, I can out-earn it. And sometimes you be, fuck, well, it ain't gonna work. So what do I need to do next? How do I dissolve this? I'd love if you wrote a book about that, because I think it would be fascinating. It's something entrepreneurs especially need to understand, because we can have the rose-colored glasses and be, well, and I don't want to put you in there, but I know I can have the rose-colored glasses.
I think we all can.
And be so damn positive that this is just going to work and just drive, that sometimes you need to step back and like, all right, where really are things?
Yes.
And say, what makes the most sense going forward? So I love that, man. Well, I'm excited about the new company you have.
Thank you.
It's going to be huge. In fact, I've got a couple of people I want to introduce you to when we're offline here.
Thank you.
But I appreciate your time and coming in. What's the website? I know you just got a website that's probably being built, but by the time this is out, maybe it'll be up.
It is ebigusa.com. And I actually just bought another web domain, and I bid on it. It'll be we're going to change it. It'll be smartgold.com.
Very cool.
Yeah,
awesome.
So I like that one. It'll be a little bit easier to market. But right now, it's Elite Bullion Investment Group is eBig. So ebigusa.com.
eBigUSA. So if you guys are looking to diversify, or if you're looking for something that traditionally has been a safe investment, through the times, check them out. Go there. Get your questions answered. That's what I love about it. Aaron's always very nice at answering questions and helping you understand, because I think it is a subject that a lot of people have misconstrued. So, we look forward to having you. I know you got a lot of good out of this. If you guys got some good stuff, please share this with a friend. Subscribe to the channel. We got more great content coming, and leave a comment. And Aaron and I will hop in there and answer. So we appreciate you. We will see you on the next one.